Hi there, everyone, and welcome into this week's market update. Don't forget that any advice contained within this presentation is general only, so it isn't tailored to your particular circumstances, and you need to decide for yourself whether it's appropriate to you. Okay, so on the X show today, we ended up actually closing the day a little bit lower. It was a bit of a whippy session today. The market, was up even and at one point slightly in the green earlier today, but ended up shooting off in the last hour of trade, following overseas futures a bit lower. So at this point of time, guys, look, I'll scroll out here. We'll have a quick look at what's going on. So basically, as you can see, we're a bit more still in a channel pattern, okay? So there's key support down here around 6,900. We've used this support level now a number of times since early 2001. So essentially, we've pretty much just gone dead sideways over that period. And yeah, so 69 is that really key level for us, which is a bit different to what we're seeing on the US charts at the moment. For me, I think they've broken down a bit lower, obviously. We'll talk to that in a moment. But in the very short term, though, there's a few key levels we're battling with. Obviously, 71.80 or 7200 just through here is a key level of resistance, and that's just playing true at the moment. So we're still stuck in a bit of a triangle pattern, guys. Essentially it's broken that downtrend line, but it has yet to form a higher peak. So I'm still calling this a downtrend. It's just starting to move slightly on a different angle. So until I start seeing something different, I'm still drawing the downtrend line in a way where it hasn't broken. If 72 goes through, then happy to reset myself back. And this is more of a psychological thing for me than anything, right? It's not a breakout. It's not an uptrend again until I start seeing higher peaks and higher troughs. For me, that happens through 72. I will wait for that, okay, to confirm. Otherwise, the way things are starting to look at the moment, right, is that it could be bearish. But my issue is we keep holding inside this pennant. So whether you want to call that a little ascending triangle or whatever, it's a triangle, right? We're stuck inside it and we need a breakout one way or the other. I still kind of feel that that breakout's going to be down in the short term. We've got quite heavily red futures again. China's come off a bit in their market in this session, and as we speak, Dow futures are down about 140, S&P 500 futures down almost 50. So look, at this point, things are looking a little bit bearish again. There's a lot coming up this week in the way of US data and things like that, and that will probably shape what we see for the rest of the week here. All right, so S&P 500, okay, important chart to be looking at the moment, because that really assesses for me whether we're going to end up in further bear market territory or not. Now, a lot of people still aren't calling this a bear market. All right, I'm calling it, guys. Okay, I'm happy to call this a bear market. There's enough evidence here for me to sort of say where the momentum's down, right? For me, it's all psychology. How do you manage your psychology? Well, it's just being true to your view. For me, this is a bear market. Textbook, not quite, but it's a bear market, guys, right? If you compare this to the correction we saw in COVID, that was a almost 50% correction. It happened in a month. It was out of the way pretty quickly. We've had downward momentum in this market since January. We're talking now close into 6 months of sideways movement, or 5 months of downward movement. Get it right. Okay, so through here, downtrend. Okay, we tried to break that to the upside, came straight back into the downtrend again. You got in the medium term on a monthly chart. If you look at that, you got your first lower peak, lower trough, right? So let's go across to a weekly or a monthly. Okay, you've got lower trough, lower peak than the previous peak, lower trough. That's the start of a downtrend, all right? Although it's not, really quite mature, by the time this gets matured on the weekly or the monthly chart, it'll probably be over, right? And that's usually the case with these types of downtrends on indexes. So I'm calling it now, right? And I'm calling it because there's a lot of technical signals here suggesting further downward movement. You got that key head and shoulders pattern. I talk about that every single week. I'm not going to talk too long about that today, but that's suggesting a move down to 3,500. The Fibonacci retracements are suggesting a move down to 3,500 as well, right? So you got those two bits of news there. Now, I'm not saying we're guaranteed to go down there, guys. Nothing's ever guaranteed in markets. We know that, right? These are just technical signals. But for me, the fundamentals and the technicals are starting to line up for further downward movement. And this is probably a reasonable assumption of a target. Okay. And obviously, we're always welcome to change our views on a daily and a weekly basis because, markets are a changing beast. They're always changing on a daily basis or weekly basis, depending on what we know, right? So at this point, with the interest rate hiking cycle, with potential weak economic data coming up, that's sort of your perfect storm for this to play out. If we start seeing some reasonable economic data coming out of the US to get some confidence back, if we start seeing maybe a little bit of backpedaling by the Fed, then that will change things to a little bit more bullish, right? But at this point of time, all I'm seeing is quite a bit of volatility. I've got lower peaks and lower troughs across all of my time frames that I like to look at. We've got some interesting crossovers in our moving averages. It's looking bearish, guys. There's no doubt about it. Okay. All right, so what's happening out there, right? Number one, Labor wins the election, so Anthony Albanese as the next Prime Minister here in Australia. We're still yet to know whether Labor has the majority at this point of time. It's been an interesting election. Okay, we've got a lot of independents now. That have taken on a lot of the Liberal seats. Okay, so it's been a bit of a disastrous election for the Liberals, but Labor's definitely got the election win. But big question mark around majority or not. Okay. But regardless, guys, so what do we know and how's it going to affect the market? I still feel it's a little bit early to make predictions on this personally. But a few comments that have already been said that make me a little bit nervous is the new Treasury came in and talked about inflation, saying that it is out of control. And if that rhetoric continues, okay, in the coming weeks, leading into the next RBA announcement, well, the big question is going to be, will the RBA follow the rest of the central banks higher? Right. So look, that's probably the biggest thing I'd be watching in the short term here for market related volatility would be, will the rhetoric of the RBA now change? Will they become a bit more hawkish? So what are we seeing around the world in the sense of interest rates and central banks, right? So the Fed, we know, is going to lift rates by 0.5% over the next two meetings, right? One of being in 3 weeks' time, middle of June. The next would be end of July. Okay, we know by the end of July there's going to be another 1% increase in the US rates. Prediction after that is a 0.25% rise at each and every meeting till the end of the year. So there's a pretty big gap between the end of July and the September meeting. But that's the expectation from the Fed at this point of time. The most other central banks are flagging that rates are going up. We'll hear from the Reserve Bank of New Zealand tomorrow, in which they're also expected to lift rates by 0.5%. So that's very hawkish out there, guys. Okay, very hawkish, and it's all about inflation. They're trying to bring inflation back under control, but they're doing that in an environment where inflation's being caused by supply chain issues. So they're destroying demand. Okay, they're trying to get demand to slow down, so that way it'll bring the inflation back down. But what we really need, I believe, is a repair of the supply chain. Okay, so I think markets could be with a bit of pressure on them in this environment because you've got an environment where interest rates are going up and economic data is expected to fall. And this is what we've got to watch out for, because if we get both of those things happening at the exact same time, economic data coming in lower, especially in the US, okay, whilst the Fed is increasing rates, it's probably going to hold markets back. If we start seeing economic data holding okay, right, and the economy is withstanding these lifts in interest rates, then the mood of markets will change very, very quickly. Okay, so PMI numbers tonight, very, very important. GDP numbers later this week, very, very important. Price index numbers on Friday from the US, very, very important. So watch these bits of economic data. You'll also hear from Jay Powell over the next few sessions, okay? There'll be heaps of speeches from central banks and things like that over there. I'm not hearing confidence, guys, right? The last thing I heard Jay Powell talk about last week was two things. One, they're not going to take the foot off the pedal. And two, he can't guarantee the soft landing. None of that is positive, guys, right? It doesn't matter how you spin this at the moment. Everything seems like a double-edged sword, right? If China goes into lockdown, it brings inflation lower. But then that's China in lockdown. So inflation coming down means the world economy is getting weaker, right? So there's no good way out of this at this point of time, right? You either weaken the world economy, which sends us towards potential recessions, right? And that's the world economy into its recessions. We might do all right out of this, okay? Inflation being high is actually pretty good for our exporters. Like us as a country, Australia might be okay. I'm talking about the world markets here. Okay. World markets, although have come off quite a bit, there could be more in this, guys, right? It very much could be because of this whole dynamic of bringing demand lower to fix inflation. The best result here that's going to get markets going up again is going to be news that the supply chain is clearing or that the Fed feels that they've damaged the demand enough and they're going to then become a bit more dovish again, right? That's the few things I'm looking for, guys. We need an answer to this. There doesn't seem to be much light at the end of the tunnel at this point for me, right? Markets are oversold, yes, but where's the light at the end of the tunnel? That's what we've got to be looking for here. Interest rates going up is just making that light dimmer and dimmer and dimmer, right? So I think we've still got a few months of pain here, okay, until things start turning around. We need to see inflation expectations coming down, and we need to start hearing the rhetoric of these central banks changing to a little bit more of a softer rhetoric uh, rather than putting their foot on the gas pedal to lift rates, right? Because that's all we're hearing at the moment. Okay, so this is big. This is underpinning the larger issue here. War in Ukraine is not the issue, right? For markets, okay? Markets tend to actually like wars, okay? Because commodity prices shoot up, exports go up, all that sort of. There's heaps of positives that can be taken for a market, even though it's horrible. It's absolutely devastating what's happening over in Ukraine. But this time, on the back of COVID, lockdowns in China, supply chain problems, there's a lot happening out there, right? There's a lot for markets to digest, but in all of this that's happening, there's only one thing that matters, right, for markets to turn back around bullish again, and that is going to be a change of the rhetoric from the Federal Reserve, good economic data, or resolution to the supply chain, right? They're your three underpinning major issues that we've got going on at the moment. Okay. So once again, what does a Labor victory mean for the markets? I'm not sure yet, guys. I don't think it's going to mean a whole lot. Obviously, there's going to be a push for green energy. That was already kind of there. I think miners will still tick along quite well. I think if anything's going to be a safer bet to be behind in the near term is going to be miners. The move to green around the world is going to be, strong demand for copper. I don't think with news of India putting a bit more excise on their, well, sorry, new excises on their iron ore exports and things like that. That's going to have demand on our iron ore increase over the next period of time. So miners for me are a really good bet in this environment. I think that they will hold quite well even if the markets keep falling. What you got to remember in all this, guys, okay, is that this is a growth stock sell down. Values come off a little bit recently, but mostly the sell down's happening in the growth space. And that's why our market, the local Australian market, is holding up a lot better than markets, overseas markets like the US, which is heavily growth-based market. So that's the big thing, guys, right? US economy versus interest rate hikes. This is where it's at. This is the core of the issue. This is what you got to be watching out for week by week, okay? Economic data, is it showing weakness? If that's a yes, plus the Fed also talking about increasing interest rates, that for me is the formula for the market to fall, okay? If that rhetoric changes, if we see strong economic data, okay, that warrants the lift in interest rates, then we're okay. All right, so you might get sideways to a slight lift. If you see the Fed start backpedaling a little bit and say, look, you know what, I think we're starting to get inflation under control. We're going to sit tight for a moment on interest rates. Can't see that happening in the short term, guys. But if and when something similar to that type of rhetoric happens, that's your turning point as well. Okay, so I don't think we're there yet, but this is the dynamic we need to watch for. Okay, last but not least, the next big thing for our market that you need to watch out for in the short term that has not been really received well by markets yet is China stimulus. They're for me, looking at what's happening over there, they're kind of in a similar situation to what we were a year or so ago when we're starting to do all these lockdowns. Okay, so about a year and a half ago, I might have my time frame wrong. Could be 2 years now. I'm losing track of time. But when we started doing lockdowns and our federal government started talking about keepers and seekers allowance, right? When they first started talking about these lines of stimulus, the markets didn't react all that much. But within 2, 3, 4 weeks, the market participants, all your investors, they started digesting this information and realized that the lockdowns wouldn't be that big a deal because of this stimulus that was coming in. Now, we've got to watch whether that's going to be the same case for China. We saw a slight lift in commodities over the last few weeks since China started talking stimulus. If they continue to talk stimulus and start talking maybe some handouts or ways of protecting businesses, ways of reviving their real estate issues, all this sort of stuff's being hinted on and talked about. No one's taking it seriously yet. This is what we need to watch. Keep a very close eye on Chinese markets. If Chinese markets start breaking and looking to go higher, then that could be a shift of sentiment that we're looking for towards commodities and towards our miners. Okay, so we follow something in between the US and China. Keep an eye on China right now. Stimulus is always positive for markets, guys. Okay, so keep an eye on that space. All right, so that's all I've really got. Look, there's a lot going on out there in the background. The trends are down. Our market's holding up relatively well in comparison. We will do something in between what the US is doing and what China's doing. Local politics will help a little bit on what sectors get bought up on our market, but the overall sentiment it tends to be more world based. Okay. All right, I'll leave it there. Thanks for listening in this week. Take care and bye for now.